Cantor Fitzgerald and BGC CEO Howard Lutnick is here live. Cantor is a primary dealer authorized to trade U.S. government securities with the Federal Reserve Bank of New York. And trader John Corpina is live from the floor of the New York Stock Exchange. We are going to start with Howard Lutnick. And Howard, Janet Yellen said today that the U.S. banking system is, quote, stable. But if it were stable, why do these banks need everybody, including the money center banks, J.P. Morgan, Citi, and everybody else, plus the government, the FDIC, to rush in and help?
All right, so all these banks received so many deposits that they couldn't make loans fast enough. So you know what they did? They bought long U.S. Treasuries and long mortgages. Interest rates went up, and these banks lost all their money. All their money. Silicon Valley Bank lost $18 billion. How much money did they have? $18 billion. First Republic lost all of its money, So all it has left is franchise value. So I think people who are trading the stock today are taking a wild risk. These companies have lost all their capital. Signature Bank, all of its capital. So what the government did is it went in. Remember, when deposits pull out, they have to sell their bonds at that low. Remember Silicon Valley lost $1.8 billion? That was just giving depositors back their money. So what happened is the Federal Reserve and U.S. Treasury stepped in and said, we're going to do something called the Bank Term Funding Program. They are going to take U.S. Treasuries and mortgages from these banks and give them par for 1 year.
Doesn't this sound reminiscent to what happened as far as the government was concerned in 2008? And by the way, if we put up Treasury yields, we've seen wild swings there. They began to plummet yesterday, well off the highs that we have seen over the past several days, 2-year, 10-year. And then when the ECB and Christine Lagarde this morning said, you know what? I don't know, she showed a spine of steel, didn't she? They raised rates by 0.5%. You know, we've got our meeting less than a week away with the Federal Reserve. Suddenly those yields started to pop up again. There are severe dislocations, are there not, because of what you've just outlined?
Sure. So like 2008, which you said, they set up after Bear Stearns 6 months. And basically what they told Lehman is you've got 6 months to get your house in order. So they just said there's a 1-year deal to protect you guys. You all have 1 year to get your house in order. So these banks have got to find partners, saviors, sell themselves. And they're all going to have to do something in a year.
Would you get cute with First Republic? I know people who were buying it at its lows on Monday and then sold it on Tuesday and thought, oh, I made all this money. Let me try this again.
Well, it's playing with fire. The bank itself has no real value other than its franchise, which is a pretty cool franchise, but it has no capital. So is it worth $30 a share? No way. And what you're going to see is investors are going to come in at much lower numbers in this cap, and these stock prices where people are just gambling with it are going to get shellacked.
Howard, BGC's trading floor, Cantor Fitzgerald's trading floor must be wild right now. Are either of those entities have anything to do with what's going on behind the scenes?
Yeah, we like to buy assets from these banks. So there's fun things for us to buy, fun things for us to step in because these banks are, of course, in trouble and we can buy some things. But BGC's trading floor, remember, we suffered with zero interest rates for all those years, right? We would come in and talk about the dollar and things. And now we have interest rates, so things are moving around.
And the stock of BGC is looking very healthy if you look over the past year.
Oh, it's going, this year we're up over 40%, up 5% today. Interest rates mean our company is going to do tremendously well for as long as there are interest rates. We suffered when they were zero, but now obviously things are great for us.
But you survived because you had a strong balance sheet and your team wasn't taking stupid risks like apparently Silicon Valley Bank was. So is a First Republic worth saving?
Well, First Republic did the same thing. Okay, they lost their $12 billion.
Is it worth saving?
Of course it is. It's a great franchise. So what's going to happen is some of these big banks are going to try to buy it, but they're not buying it for $30 a share. Remember Bear Stearns. Just remember Bear Stearns.
Rather not, but go ahead.
$2, then it went to $10. Okay? But these numbers are going to be much lower than these stock prices. You're just playing with fire. Can it bump up? Can it bump down? It's fun for you to talk about, but in the end, you're going to see these regional stock prices the bank stocks prices for these big regional banks who've lost their capital are going to be lower. Much lower.
Howard, the Federal Reserve meets next Wednesday, starting Tuesday actually, but makes the decision Wednesday. We know what the ECB did today. It continued to tighten. Christine Lagarde said inflation is still the #1 issue. What do you think the Fed's going to do? What do you think the Fed should do?
I think the Fed knows that the pain that these regional banks have suffered means they're going to lend less starting now.
Credit's
going to tighten because they're sort of choking the person who's making the loans. So it's going to tighten. That's going to pull them back from 50. I don't think they're going to take their foot off the gas. I think they're going to just come with 25. And they were debating 50 and 25. I think they just come with 25.
Yeah.
And they talk about inflation being too high, but they talk about credit tightening with what's going on with the banks. So I think it's middle of the road, next the middle of the week.
What a difference a day makes.
Wow.
Yesterday, standing pat, no move, was much higher. Right now, that's only at 19%. We're talking about Fed funds futures, this mechanism where investors can bet on what the Fed will do. We now have an 80% chance at a 25 basis point hike and nothing for a 50.
Nothing for 50. No way for 50. No way.
Well, why, when Credit Suisse is imploding, did the ECB feel it was safe enough to continue with a 0.5% hike?
Well, because the ECB doesn't sweat Switzerland, right? Remember, Switzerland is like its own little thing, and the Swiss came in. I loved when you said too Swiss to fail. I thought that was a fantastic comment.
I did. I thought that overnight I was sitting there thinking, oh my God, they're going to bail them out. This is too Swiss to fail.
It's such a good line because it's exactly right. They're not going to let them fail. They've got plenty of capital. They just had a giant liquidity issue. They did not lose their money like these regional banks did. Okay, they did not lose their money. They just had a liquidity crisis. Everyone was pulling.
Bad management.
And so they put it in the mud. And the management.
Oy vey. That's right. Howard, great to have you.
Great to see you, Liz.
Thank you very much. Howard Lutnick, BGC and Cantor Fitzgerald CEO.